All right, folks. So thank you very much for taking the time to join the investment webinar here today. My name is Dean Gallagher. I'm an investment consultant and partner here with Portfolio Builder. Folks, what I do specifically is focus on helping the people that are on our free trial. Okay. And it's really neat, guys, because we give our business model runs the freemium model. Okay, so we literally give you the chance to structure the portfolios exactly how we have them set up. Okay, and make some money while you do it. Okay, so it's really cool. That's really the entire reason why we give you one free trial. Okay, and you just get one. So make sure to take note of that. Okay, and take advantage of that trial. We're going to give you a ton of information. We're going to show you exactly how to bulletproof your portfolio today. Okay. And literally we're going to be there to answer any questions you have. And you're going to have just in your free trial, literally 10 hours of live interaction time between all of the webinars we're going to host. Okay. So folks, don't hold back any questions whatsoever. Okay. The more questions you have, the more information you're going to receive from us, and the bigger the value is for your free trial. Okay, so thank you so much for taking the time to join us here today, folks. And I'm going to go ahead and go over to my slides here. I want you to see me. This is me on the left here. My name is Dean Gallagher. I'm a partner and investment consultant. And trial members, I am your dedicated resource for any and all questions that you do have. Okay. Now on the right, you're going to see Jason. He's our founder and our chief investment officer. Okay. Jason is your dedicated resource for any and all questions. He's the type of guy you want to be playing chess with, not against. An incredibly smart human being. Okay. Kind of cool family history actually with Jason. His grandfather was actually the co-lead scientist that created the first hydrogen bomb. Okay, so a pretty neat, family background there, and his ability to think through critical situations is really really impressive. And I've had the good fortune of knowing Jason since I was in college, and I've been working with him since that point. So pretty neat. But wanted to give you guys kind of a quick background there. Okay, show you what we do, why we do it. Okay, and why we always want to make sure that your capital is in the safest place possible. Okay, and we follow really kind of two incredibly simple rules when it comes to investing. Okay, and we'll cover those in just a second. All right, so real quick, folks, want to cover our mission for you during your trial period. Okay, and then also as a customer as well, right? So number one, engineer and build the safest growth for your hard-earned nest egg. Number two, educate you on how the central bank controls the market and attach your capital to it. Okay, and we're going to discuss that in depth today. Okay, number three, we're going to answer any and all questions you have about our portfolios in the live interactions in our exclusive webinars. Okay, and folks, this is so cool because really you're not going to get the education from a financial advisor. Okay, you're not going to get the education from a hedge fund. The goal of what we're doing, right, is to show you everything that we know so we can help you create generational wealth. Okay, take your small accounts, turn them into 7-figure accounts, 8-figure accounts. And hey, for a lot of people, that's going to take years to do it, but that's what we're here to help you do, guys. Okay, and we're going to educate you and literally teach you every single thing we know. Instead of, with the advisors and the hedge funds, they kind of keep you behind a curtain. They don't tell you anything. Okay, they just want you to, be a customer with them for life. Okay, we want to educate you guys. You know what? And if we give you enough education and you go away, long term, hey, because you do understand the markets and you don't need us anymore, awesome, guys. Super cool. But we want you to be able to teach your kids, your grandkids, right, how much control the central bank has over the market. Teach your grandkids and your kids how to attach your capital to it to achieve the utmost consistency. Okay. and literally, folks, attach your capital to the people that have absolutely rigged the bond market, the stock market, and the spot price of gold, because they control all three. Okay. And I'm not kidding you. They absolutely control. It's a game. It is not an open market. I can tell you that from the bottom of my heart, from everything I've learned with the 34 years Jason and I have put into looking at the markets, figuring out what really is the driving source of everything. And I can tell you it's 100% the central banks, or in the United States of America, what is known as the Federal Reserve. Okay, it should be called the corporate banking system of America, or the puppets for the 100 richest families on the planet. Okay, and they absolutely have full control of all of it. Okay, and so we'll talk a little bit about that later too. Okay, number three, guys, we want to answer any and all questions you have about our portfolios in our live interaction in our exclusive webinars. Okay, so don't hold any questions back, guys. Just jump in there. As Ryan posted in the chat box there, just raise your hands, guys. What we'll do is we'll unmute your microphone, and then we'll answer any questions that you do have. Okay, so super cool. So folks, many of our members make the cost of our membership or more in a few weeks, and our trading plan takes less than 2 minutes to execute at noon Eastern on Monday, Wednesday, and Friday. My challenge to you is to see how much you can make over the trial. And I want to ask you, is there a better way to build trust? Okay, I haven't found that way, folks. But hey, if you think of a better way to build trust besides me putting some money in your account, okay, before we start working together, please let me know. Type it into the chat box. I would love to understand what that is. Okay. Now, with that being said, folks, I want to show you a screenshot I received from a gentleman named Ron Steger. Okay, Ron is one of our pro clients, has a substantial amount of money behind us at this point, and just wanted to call your attention to the fact that he made $97,019.89 during his 7-day free trial. Okay, he did use quite a bit of capital to achieve that, but just wanted to show you the screenshot he sent from Thinkorswim. And I'll never forget the title of his email is "Dean, the profits look good." Opened it up and saw this and went, wow, that's incredible. So to date, this is still, the person that got the most dollar value out of our 7-day free trial. Okay, and pretty cool. 97,189 cents, right, is actually more than doubled the average household income in America. And Ron generated that over a 7-day free trial period. Okay, so pretty cool. Just wanted to touch on that, guys, to help you understand the value of the trial that you do have. Okay, and that's the financial aspect of it's great. Okay, the educational aspect is even better, honestly. Okay, so let's go ahead and keep moving through here. Okay, so my challenge to you is to see how much you can make over the trial, and I want to ask you: is there a better way to build trust? Okay. Okay, so we're going to follow 2 simple rules, folks, when it comes to everything that we do. Okay, rule number 1, never lose money. Rule number 2, don't forget rule number 1. All right. And hey, Ash, I see one of our buy and hold customers is on here. Hey, Ash, hope all is well. Let's see here. And Ash, how much capital do you have behind buy and hold at this point? I think last time we talked, I think it was kind of around 50K. Are you still around 50K, Ash? Okay, let's see here. And we have in Craig, we have in Jerry, we have in Shahid, and James Robertson. So thank you very much, team, for joining us here. Appreciate your time. Okay, and let's go ahead and keep going. So folks, what we're going to do today is help you quickly establish a defensive balance for your portfolio. Plus, you'll be ready to profit from a very risky time period with our trade engineering. Okay, trade alerts will be delivered at noon Eastern via text message and email every Monday, Wednesday, and Friday. So you're going to probably wonder, well, what are we doing in the webinar here today? And guys, this is simply dedicated for the people that aren't paid clients, right? So I want to dedicate my time to you, okay, to show you how to set this up, how to click the buttons, how to get everything ready, okay? And hey, Craig, I see your microphone's unmuted, bud. Do you have a question?
No, I'll mute it back.
Okay, cool. Well, and Craig, if you do have any questions, feel free to just go ahead and raise your hand, unmute your microphone. We would love to address any questions you have. And Craig, thank you so much for joining us here today. Okay, bud.
Thank you very much.
Hey, our pleasure. Okay, cool. So, guys, we always engineer our positioning in coordination with the financial system, okay, i.e., the Federal Reserve, okay, the Treasury. They control our financial system and the macro environment. Now, all you have to do, okay, is take 1 to 2 minutes to replicate your trade in your account. Okay, it's super simple, and it's actually 4 clicks to enter a position, and it's 3 clicks to exit. Um, that process, if I'm not running an example here and going slow just to show you guys an easy visual, literally takes me less than 30 seconds to enter a trade and less than 30 seconds to exit a trade. Okay, and I actually added up my time that it took to replicate both the pro portfolio and the bootcamp trades in 2019. Okay, that took 8.5 hours total. Okay, and I was able to substantially grow my IRA account. Okay, and I do the bootcamp trades with my IRA account, and specifically for me, I do the pro portfolio in my IRA, and I do the bootcamp trades with a cash account that I have. Okay, that's what it looks like in my ecosystem. Not saying you have to do that, just saying that's what I'm doing, and that's what I'm getting really good success from. Okay, so guys, live trade alert presentations are going to happen every Monday, Wednesday, and Friday at noon. Okay, for the pro portfolio, it's going to meet those 3 days. For the boot camp, for buy and hold, it's just going to meet on Mondays. A lot less trading in the buy and hold system. Beautiful system though, outperforming the market. It's going to be less trading for the buy and hold system. Okay. So you can access the live presentation from our trade alert email we send out each Monday, Wednesday, and Friday. Simply click the image that looks like a play button to join us there, okay? Or just simply replay. All right, and please ask any questions live during the presentation. Just click the mic. Just click the icon to unmute your microphone, or simply type into the chat box as you guys have those questions. Okay, and if you have any yet, folks, you can always go to portfoliobuilder.io. Okay, to review our track record. Sorry about that, guys. Okay, and we build trust with our clients by being 100% transparent with every position we've ever had. You can always access our track record by going to this link. Okay. All right. Now, a few things that you're going to need to have in place to get the most out of your trial. Number one, a brokerage account set up to follow our trading plan that has options trading enabled. Okay. You can use real capital or simply paper trade. Then you can see how incredibly easy it is to give your hard earned money the protection it deserves. Number two, you're going to need the ability to take 1 to 2 minutes to follow our trade alerts released at noon Eastern. These alerts are by no means time sensitive at all. They simply need to be placed before the market closes at 4 Eastern. Okay, and that's for specifically the portfolios. Okay, so for buy and hold, and also for the pro portfolio, those are going to be at noon, and you're going to have a 4-hour window to replicate those trades. They're not time sensitive. You don't need to be glued to your computer to put them in. Okay, we're trading really big liquid assets. Okay, this is not day trading by any means, folks. So many day traders don't understand that over 92% of all people that have ever been flagged as a pattern day trader by the SEC either lose all or 90% of their money within the first 3 years that they have that. Okay, this is not day trading. This is super safe, calculated, risk managed investing. Okay, and just want to make that really clear. Now, number three, you're going to have a mobile phone to receive our text message trade alerts. Okay, many of our clients take these trades on the go from the airport, the restaurant, and the car, anywhere you have service. It's important to make sure you entered your cell phone number when you sign up for the trial. If you use a landline, simply email the cell phone number to ryan@portfoliobuilder.io, or simply type in your full name, cell phone number, and email into the chat box, and Ryan will get you added to the system. Okay, and Ryan is our technical director for the company. So anything distribution wise, technology wise that you see, that is created by Ryan. Okay. But make sure, guys, to send that in. And so, speaking of kind of placing these trades on the go, my favorite so far, folks, favorite trade or place I've ever replicated a trade, it was actually last November. I was out on the Catalina Flyer, and I was going from Long Beach out to Catalina Island for We did like a lunch and a submarine tour out there. Super cool with my wife and I. But I actually placed the trade on the boat on the way over there. Pretty cool. So, boats aren't listed up here, but personally, that was my favorite. I was actually watching a pod of a couple hundred dolphins jump in front of the boat, literally while I was placing my trade. Took a couple seconds to place my trade, went back to enjoying my beautiful day in the ocean. Okay. Now, number 4, you're going to need an email provider that's in good working order. Okay, we send out the free webinar invites via email, and we also send out the trade alerts via email on top of the text messages. Okay. All right, guys, and you can see how defensive and how bulletproof our portfolios are with a couple of these slides. Now, in December of 2018, the SPY fell up to 16.63%. Okay, our defensive bulletproof portfolio didn't have any drawdown whatsoever, and it actually made 1.17% return. Pretty cool. Okay, now we massively outperformed Ray Dalio, Warren Buffett in Q1. We're extremely proud of that. And not to say that we're smarter than them, okay, by any means. Right, these are two of the people that we use to kind of develop our methodology behind, but we smoked them in Q1. Okay, and really, folks, like I said, it's not because I think we're more intelligent than them by any means. Okay, but we're not trading hundreds of billions of dollars, so you guys are going to be able to be more nimble. Okay, get in and out of positions faster. That way, when you're trading hundreds of billions of dollars, it literally takes you weeks to buy and sell. Okay. And a lot of those time in those weeks when people are trying to, buy and sell on good opportunities, you're missing multiple percentage points because you have so much capital. Okay. And like Dalio, he got caught up in a liquidity crunch, right? In Q1, he couldn't exit stuff fast enough. And that's part of why he got hurt so bad. Okay. Now for us, it takes us seconds to exit, right? We're not trading hundreds of billions of dollars. And so that's part of the nimbleness that's going to help us outperform, the massive whales out there. Okay. But it's pretty cool, guys. In February and March of 2020, the SPY fell up to 34% at its peak. Okay. Our pro portfolio, plus the 2 trades that came from the boot camp, actually made 9.2% return in the same time period. Okay, so think about that on $1 million account. If you had $1 million just net long the S&P 500, you had 34% drawdown, which is the equivalent to $340,000 of drawdown. Okay, or if you have your bulletproof setup that we show you how to build today, okay, and every week, right, moving forward, we will literally show you how to profit from times of high volatility. Really pretty simple strategies. We'll show you what that looks like when the time comes. Okay. But we did have a nice allocation to safe haven assets. Those produced a beautiful profit and we made 9.2%. Okay. Now in closure, here's the nuts and bolts of it. We're going to show you how to be defensive, balanced, and profitable in this market condition. Okay. Jason, our chief investment officer, will be covering the build out of this portfolio live every Monday, Wednesday, and Friday. And I'm going to be showing you guys how to build it here today. All right. So pretty cool, guys. Now, with no further ado, let's go ahead and look at building out that portfolio. All right. So what we're going to do first, guys, is cover the pro advisory. Okay. And this is an alert from yesterday, right? Because, you guys are either, on a trial. So you weren't in there yesterday, but we're here to help you build this out today. Okay. But when you do sign up or when Ash does make his upgrade, we will get you this content live in real time. Okay. So let's see here, guys. So on the pro advisory, this is per 25,000. Okay. We build the pro advisory in tranches of $25,000. Okay. And we refer to that as a tranche, right? So a tranche is just a certain set sum of money that you're going to invest. Okay. A lot of people don't know that term, but we use tranches of 25,000 for the pro portfolio. Okay. And it's really cool, guys. You're going to have 400, you're going to buy 400 shares of UPRO, okay, per 25,000 you have. So we're literally engineering exact portfolio structure for you all to replicate. This isn't something other services offer. Okay. We're literally showing you exactly how to engineer the portfolio. We're not saying, oh, go buy this unprofitable tech company. We're hoping it goes to the moon, right? We're literally showing you how to run your money like a hedge fund. Okay. So per 25,000, you're going to buy 400 shares of UPro. Now, UPro is really neat because it literally has all of the best 500 companies in the world. Okay, all of it, all inside of it, right? So you have your Apples, your Googles, your Microsofts, your your Amazons, right? All inside of that. But you have your banks, which are a huge value play right now. You have your energy companies, which are also a huge value play right now. Okay. And you have everything in there, right? And it's just really cool. So instead of, I think actually, let's see here, Shahid was actually touching on this earlier, right? All these companies are telling them to buy 100 unprofitable companies to hope for something. Inside of UPro, guys, you literally have the best profitable companies on the planet inside of it. Okay. Now, here's the thing that's even cooler. Because the way that UPro is built, you have a 3x leverage, okay, built into this. Okay, so for every 25,000 you put to work, or for every $25,000 tranche you structure here, guys, you actually have about $75,000 working for you. Okay, so you get that 3x leverage factor, and you don't have to pay a cent for it, right? If you take a look at the margin costs for TD Ameritrade to lever up, 3x, they're going to charge you 7%, right? 7% on $100,000, 7 G's. You get 7% on $1,000,000. That's $70,000 a year. They're going to charge you in margin, right? And if you're just going to go margin into 500 good companies, and pay $70,000 a year in that margin, why do that when you can literally buy all of the best companies, period, inside of this asset class? Okay. And get that 3x leverage built into it. Now, so you guys are probably thinking, well, Dean, you're just saying that this is going to be a bulletproof system and this is leverage. That might be a little risky. Absolutely understand where you might be thinking. Now, so this is just step one. Okay. Now, step two is right here. Okay. We're then going to wrap 2 layers of option protection around that asset. Okay. Around your UPro asset. So you have really nice diversification, right? Let's say you're kind of in the Hummer here, driving down the freeway, and military issued Hummer that's bulletproof. Okay. Because you have that diversification over 500 companies. Okay. You don't have any individual business risk whatsoever. It's all grouped into that, right? So one of these companies could even go, bankrupt, pull an Enron type of thing. And you know what? UPro is not going to be affected in the least. Okay. Now, however, if conversely, if you're just holding that, that Enron, right, that some hypey newsletter told you to go buy, okay, and it goes bankrupt, you have no choice but to literally kind of lose the mass majority of what you just put into it. Okay, literally, if there's a company inside the S&P 500 that goes bankrupt, you won't even feel it. Okay, literally, because there's 499 other companies in there supporting that asset price. Okay, so you're in the Humvee going down the road, right? But once you put this around it, guys, you're now in a tank, right? Because you have 2 layers of option protection, and you really just can't get hurt that bad. Okay, so pretty cool, and that's the structure. So let's take a look at building this live together. Okay, so I'm going to go to my small account here. Okay, and what we're going to do is literally just build this out A to Z. Okay, so we're going to follow step 1 first. Okay. So here we go. You know what? Let me touch on this too. Okay. So so your $25,000 portfolio now has the equivalent buying power of $68,880. Okay, or 175% increased buying power. Okay, and then you're also going to have 2,600 in cash for option trading and protection. Okay. So that's what the structure looks like today. Okay. And typically, folks, we've had a mix of bonds, okay, and gold. But right now, the Fed is telling you to own stocks for an insane lightning ride up. Okay. So we're gonna do that, folks, and we do have a ton, okay, of diversification in that. Okay, and we do have a ton of protection as well. Okay, now I see Shahid has a question. Shahid, go ahead, and Jerry, if you have a question, go ahead too, bud. Hey, Jerry.
Hello. Yeah,
Hey,
I'm Shah.
Shahid. Yeah, go ahead, bud.
So I'm Shahid here. Actually, you mentioned about Enron. So I was beaten up very badly. Because all these investors were crying out. I mean, and giving the idea to buy. So I buy 5,000 shares, and after 2 weeks, hook. That's it, gone forever.
Oh
So this is
man,
my personal experience.
sure. So you know exactly how much it hurts to have individual business risk, right, by owning a single company.
Yeah,
And
yeah.
Shahid, I'm sorry to hear that, but a lot of people in Texas, right, got hurt by that because Enron was this wild company that was going up. What was their best year, Shahid? Weren't they up like 170% in a year
Yeah,
before they crashed? Yeah.
yeah.
So yeah, and I always wonder if Tesla's going to fit into that one day.
They where they make mistake because everybody is saying keep on buying, is short, and you went to 100, and then all of a sudden, the day you woke up, boom, gone
Yeah.
forever.
Yep. Yeah, and that's why, Shahid, it's so much better, right, to just own that index and spread your risk across 500 companies. This is
So
why you see.
I literally actually lost almost $200,000.
Yeah, yeah, Shahid. In my 20s, I actually had a similar experience. I was dumb enough in my 20s to be reading the Motley Fool newsletter, and they sent out this. They wrote up this.
They make you fool. They make you fool too.
Yeah, so I was reading this newsletter, the Motley Fool, which I will never touch with a 10-foot pole today. But they were telling me about some company that was going to revolutionize the iPhone supply chain. So I buy into it. I read this research report on it. In hindsight, it was so dumb. I didn't do enough research. Long story short, though, this company goes literally files for bankruptcy the day after. I mean, I bet the Motley Fool spent $10 million advertising the stock that they're pumping, right? And it literally went bankrupt overnight. And I lost literally 95% of my investment, which was over $200,000. So yeah, I've been there too, Shahid, and that's why I don't touch individual companies with my large capital at this point. Okay. Um, okay, cool. And Jerry, did you have a question too, bud? Hey, Jerry, did you have a question, bud?
Hello?
Hey, Jerry, how's it going?
Oh, fine. Um, you are explaining everything pretty good, and I'm trying to follow it. I switched from my cell phone to my computer, so I'm seeing everything legibly and big, and so that's an improvement from what I was doing before.
Oh, cool.
Yeah, so far so good, sir.
Okay, awesome, Jerry. And thanks for letting us know there. Cool. So Jerry in New York switched from computer to the cell phone here to keep following us. Awesome, Jerry. Okay, cool. And thank you, Ryan. Appreciate that. Okay, so let's go ahead and get this built out, guys. So pretty cool. This is the structure, right? So you're gonna have diversification over 500 companies, and we're gonna get that leverage. And guys, the Fed is in there printing their little hearts out, right? Looking at the minutes yesterday, they said, "Hey, we're going to do whatever we need to do to push these markets higher to increase consumer confidence." A lot of people don't know that increased stock prices actually is the number one thing that increases consumer confidence, right? How do you get GDP back? Well, increase consumer confidence, right? 70% of US GDP, folks, is built on the US consumer. What's the easiest way to increase consumer confidence? Push stocks higher. What's the easiest way to go get a ton of people hired back again? Push stocks higher, right? Super, and really that's how the financial system works, right? So because of that, we're going to use a little leverage here, but we're going to have 2 layers of put options underneath it, okay, to protect it. So let's go ahead and build this out, guys, and that way you guys can see exactly what I have. Now, so if you're sitting here watching, right, and you're in the room, you say, okay, Dean, I have, $75,000, or let's just use the example because this account has a little over $100,000. Let's use that as the example. Okay. So for $101,000. Okay. And let me grab my calculator here. Okay. I'm going to go ahead and see what that looks like for me, if I'm if I'm an investor building this today. Okay. And once again, this is everything we do is per 25K. So I'm going to take that $101,735 that you can see up here. Okay. I simply divide this by the 25,000 number here. Okay. So I take that number, divide it by our $25,000 tranche. Okay. I understand that I'm going to have 4 tranches, right? So I can build 4 tranches of this. Okay. So in the first part of the directions here where it says buy 400 shares of UPRO, okay, instead of buying 400 shares, okay, that's the instruction. I'm going to take that 400, simply multiply it times my 4 tranches, okay, to equal 1,600 shares. Does that make sense to everyone? And if you guys can type into the chat box, just say yes or no. Type that into the chat box. That'll be really helpful for me to understand how you guys are tracking and what it looks like. Okay. So feel free to go ahead and just type in a simple yes or no. If you understand that if you have $100,000 roughly, right, you're going to buy 4 tranches. So instead of buying 400 shares of UPRO, okay, you're going to buy 1,600 shares of UPRO. Okay. And does that make sense to everyone? Just go ahead and type it in the chat box. Let me know if you did, if that does make sense to you. Okay. Let's see here. And Craig says, are the 3X time sensitive? No, Craig, they're not. So with the 3X, right, there's a couple factors that's really good to know about, Craig. Okay. And great question, by the way. And keep those coming. That was really, really good. Okay. So with the 3X stuff, guys, the ETFs that have the 3X leverage, they have what's called deterioration of the asset. Okay. So let's just use this as an example. Let's say the S&P 500 moves 10% coming into the election. Okay. That's kind of what we're looking for. Now, and really long term, we're looking for the S&P 500 to go to 4,000. Okay. In very short order. But kind of into the election, we're kind of looking for about 10%. Okay. Now that would be the asset, the S&P 500 just moving 10%. Okay, great. And hey, not a bad move, right? Into the next 3 months. That's really good. Now, if you take that same type of move, okay, and you grab an asset like UPRO in it, okay, and instead of making the 10%, okay, you're probably going to make closer to 29 to 29.5%, okay, from that move because you do have the 3X leverage. Now, there will be a slight deterioration factor, Craig, that is built into that, okay, but that's okay. And I don't know about you guys, but I would much rather take 29 or 29.5% than 10%, right? By owning the same asset class, but using some leverage. And we have our put options underneath it just in case geopolitical tensions skyrocket. Okay. And Craig said he can't hear me. Can the rest of you guys hear me okay? And then if you guys can, just type in if you can hear me okay. Okay.
Sounds good.
Okay, cool. Perfect. Yeah, Craig, sorry about that. If sometimes there's a little delay in the internet, and that can cause an audio distortion. Okay. And let's see here. Jerry said yes to understanding how the share structures work. Okay, cool. So awesome, Jerry, good work. Okay, and does everyone understand why we're going to buy 1,600 shares real quick instead of the 400? And to type into the chat box, guys, just go to the bottom part of the webinar here, or the Zoom screen, and you're going to see a gray bar pop up. There's a little chat icon. You can either touch on that, and then you can type in your answers. Awesome, Jerry. Okay, cool. Awesome, Jerry's tracking well. Okay, cool. So let's show you guys how to go ahead and build that out. So we're going to do 1,600 shares, right? So let's go and grab them. Okay. And what I'm doing here, guys, is I'm in the Thinkorswim tab right here. Okay. All I have to do is go to the trade tab. Okay. Click on ask. Okay. That's going to pull up, and I'm just going to open this up for you guys really quick, just so it's a little bit easier. Okay. I'm going to switch out my number of shares here. And you know what? Let me open this up. So this might be the easiest way to do this. And this is the first time I've tested this. So bear with me, but I think this is going to be the easiest way to show you guys. Okay, cool. Can you guys see this this buy ticket much better now? Okay, it should be a lot bigger. Okay, so what I'm going to do here is you see that we're on UPro. Okay, and I'm going to change this to 1,600 shares. Okay, and really, guys, for this type of trade, it's so liquid. You could either use a limit, okay, or you could use a market order. Okay, either one. It really doesn't matter. Okay, so I'm going to actually move some of this stuff around a little bit. Okay, and I don't care what exchange it is. Okay, that's the day trading. Okay, and I'm just going to switch this to a market order. Okay, because it's liquid, right? I can go up here and look at the bid and ask. It's nice and tight, right? The bids and the ask is a cent off. I don't care. You know, it's going to fill me somewhere between there. Okay, so bingo, we have our 1,600 shares of UPro. Okay, as you can see up here. So perfect. So step one accomplished. Okay, and the market's going up. Hey, there's 188 bucks. We made it in that time. Okay, but so that step one's accomplished, right? So we have our shares of UPro. Okay, now what we're going to do is take our Humvee and turn it into a tank. Okay, so I'm going to open this screen back up. Now I'm going to buy. Now instead of, I'm going to ask this question to the team here. Instead of buying one contract of the 337 put, how many contracts am I going to buy instead if we're using 4 tranches here, right? Because this is per 25K. This is buy to open, and this is the date, right, of the option expiration. This is the strike price. Okay, how many? Let's see here: Jerry, Ash, Craig, James, Jerry, Shahid, Sue. How many shares are we going to buy, or how many option contracts are we going to buy on that today? Nice, Jerry, nailed it. All right, Jerry is very engaged. Very cool, Jerry. Yep. Anyone else know how many contracts we're going to buy? Okay. All right. All right, guys. So yes, it is going to be 4 contracts. So great job there, Jerry. Okay, so that's what we're going to do. And then Jerry, if it says to buy 10 of the 311s, how many would we buy? Beautiful. Jerry is on it. Jerry, you get an A+. You're absolutely tracking here. Okay, so let's go ahead and do that work now. Okay, so I'm still in the trade tab. And what I'm going to do here, folks, is I'm going to close this just so it's easier for you guys to look at. Okay, so what we're going to do is look at our option chain here. All right, and we're looking for the 821s. Okay, and that's what actually expires tomorrow. Okay, so this is a short time of the option contract. Okay, I'm going to go to 14 strikes just so you guys can see this a little bit easier. Okay, and conversely, I'm looking for, and actually, let me just detail this really quick. So my asset is in UPro. Okay, that's the asset class I own. Now I'm going to protect it with SPY. Okay, and a lot of you are probably wondering, well, why are you protecting, you know, a leveraged S&P 500 position with a non-leveraged? Okay, and if you had that intuition, phenomenal. Okay, there's a couple reasons. we get better insurance at a lower cost in the SPY. Why? Because it's more liquid. It's actually the heaviest traded option contract there is on the planet. Okay. So this SPY ETF has the most option volume, the most option liquidity, the tightest spreads of any option market on the planet. Okay. So that's part of why we do this, guys. And we're able to get triple A coverage for our insurance, okay, at Geico prices. All right. So let's go ahead and put that in and get it to work. Okay. So I'm looking for the 337s, right? As you guys can see right here. Okay, got those, check. So I'm going to go ahead and buy 4, just as Jerry said. And once again, Jerry, A plus. Okay, so I turn the notional 10 contracts, and be careful with this too, guys. This part's important. Most brokerages are going to put in a notional or kind of, preset option order contract of 10. So you have to change the 10 to 4. Okay. I simply look for the mid price, right? Which I see right here. The mid's 92 cents. So that's fine. Let's go ahead and send it. Okay. So that should fill any second here. And I'm surprised it didn't fill instantly because that's at the ask. So just for trading purposes, guys, let's go ahead and do that again really quick. So I'm going to go from 10 to 4. Okay. Confirm and send. That should have filled. Oh, I see it just bumped a little bit. Okay, so let's try it one more time. And we can always just use and really a market order is fine for this too, guys, because we do have so much liquidity in this. It really won't matter. Okay, but there is times where you're not going to want to have you're going to want to use a market instead of a limit. But with this one specifically, it doesn't matter. Okay, so I'm going to go ahead and make sure this is 4. I got my right strike, or my right expiration date, my right strike. I'm going to go ahead and confirm that. Okay, there we go. Now it filled it. Okay, now we're going to go ahead and look at the next option contract. Okay, so this is going to be for the 311s. Okay, so let's go ahead and open this up. I'm going to look for the 311s. Okay, and I can see right here in my option chain, right? So this is the option chain. Okay, and it has 14 strikes open here. Okay, but I want to actually go to the 311s, which is farther down. So I'm gonna have to hit the all button, expand this out, and then locate the 311s. Okay, so the 311s, guys, and so we the first option contract we bought, think of it like homeowners insurance. Okay, the 311s down here is the disaster insurance. Okay, so we need to pick up 40 of these. So I'm going to change the notional 10 to 40. Okay. I see that the mid is at 3 cents. Okay, that's good to go. Send at 3. Perfect. Okay. So now, guys, I've literally taken the steps that it took to follow our trade alert here. All right. So we have our beautiful mix of 500 companies here, but we have the leverage. Okay. And then we just wrap 2 layers of option protection onto it to protect our assets. Okay, now if we go to the monitor tab, let me open this up. Okay, you're going to see that, let me open this up just so you guys can see. Okay, so you can see that we have our 1,600 shares here. You know what? This might be a little easier to, there you go. So 1,600 shares of UPRO, check. Okay, SPY, I have 4 of the homeowners insurance, and then I have 40 of the disaster insurance. Okay, maybe think of it as hurricane insurance, and that's it, guys. Literally, that's it. And literally, since we structured that, okay, we've already made. Let's see here, the total profit and loss here. We made $178 in that. I don't know, what was that? A 3-4 minute process. Okay. So pretty cool. And that's that, guys. That's how easy it is. So let me ask you guys, how much money are you looking to put to work? How much money do you guys have in cash right now that's just being eaten away by inflation, right? And so real quick, guys, too, let me switch over to my other account here. Okay, and we'll take a look at that. So for the day, it's still down just a hair because it was down a little bit from yesterday from where we bought. Okay. But this is what this, my profit and loss looks like in my larger account. Okay. Over the last, it's 43 trading days here. So a little over $39,000 in profit over the last 43 trading days. Okay. So cool. Any questions, guys, on that, how you get it built, what it looks like? And we'll go back to the other account just so you guys can see what we just built once again. Okay, so we have our shares of UPro. We have our option contracts or our homeowners insurance here with the 4 contracts. And then we have our disaster insurance here with the 40. Okay. So sweet. And any questions on that whatsoever, guys? All right. And overall profit and loss is $190 for the day. Not bad. Now it's 200. Market's moving up again. Pretty cool. Hey, Craig, what questions do you have, bud?
Well, is a contract then the same as a tranche? Is that the way you pronounce it? You said a tranche, or a contract's 100 shares, right? Is that the same?
No. So a tranche is a set amount of capital.
Oh, okay.
Yeah, great question though, Craig.
That's where I got lost because I wasn't following. Yeah.
Yeah.
Okay.
Yeah, and an option contract is simply a contract attaching it to basically 100 shares. Okay, and it's a derivative of that underlying asset. Okay, so getting a little technical, financial technical jargon there. But yes, so the tranches per 25K, that's what we design. The option contract is simply a vehicle that we're using to protect our assets. Okay,
got it.
Cool. Awesome, Craig. And Craig, hey, my pleasure. Craig, just real quick, how much capital do you have that's currently sitting in cash in your brokerage account today?
Well, 25,000 less than if I would have talked to you 2 months ago. But right now, freed up, I got 8,000.
Okay.
I've got some locked up. I've got a Ameritrade account.
Okay.
I've got 18,000 in it, but some of it's in the negative, and I don't want to sell it. So
sure.
Yeah.
Okay. Dang. What position is it?
Oh, I'm even embarrassed to say I got sucked in with a penny stock, and
it happens, Craig.
Yeah, I made, and then I deviated from my rules. That's the only reason. And then the reason I lost the big amount is I bought puts when the market was going down, and I was ahead quite a bit. But then, just like you guys are saying, I wasn't watching the stimulus package, and it turned all around, and that's where I lost it. If I would have been just a week earlier, it would have made the difference, but I missed it by a week. Yeah.
Sure. Yeah. So 2 really important rules to follow, Craig, right?
Yeah.
Right here.
Yes. Yeah.
And I tell people all the time, I think half of our staff has this printed out and actually framed in their office. I do as well at this point. Okay.
Yeah.
But these rules, Craig, will help you so much over your lifetime. Okay. And, I would say, hey, if you're in a penny stock, it hasn't done well, hey, you're at a loss. And I understand for a lot of people, it's hard to take that loss. Okay, Craig, but a couple things about taking that loss. Number one, you can use it to hedge some tax exposure. Okay, so that's nice. Okay, number two, a lot of penny stocks, right? They just get pumped up artificially. And then a lot of them go to die. Like a lot of penny stocks will go to what do they call it? 330 or something. Okay, so just be careful. And I would just tell you, Craig, your money is guaranteed 1,000% safer in the S&P 500. There's not a single company in there that's a penny stock. Number one. Number two, there's not a single company in there that's not profitable. Okay, 99% of penny stocks are not. Okay, and kind of number three, heck, you look at the companies in the S&P 500. I guarantee you know the first 100 by name. Okay, and so just so much of a safer place to put your money, Craig. Okay. now, so for everyone that has less than 50K to put to work, let's take a look at the buy and hold portfolio. Okay. So this is super cool, but we do have basically a setup here too, guys, that you can buy literally, okay, per $1,000 you have in your account, Craig. So you could actually structure 18 tranches of the buy and hold portfolio today. You're going to get those 500 companies, okay, and the leverage built into it, okay. And let's just do some simple math here. Let's see on 18K, okay. And let's say we get, let's go really conservative and say we get you 25% growth out of these two assets. Okay. So let's take a look at that. In 3 months, we should make you about $4,500 in this setup. Okay. You know, and that's not guaranteed, obviously, right? It's investments. But with this setup, we're literally looking for kind of, you know, let's just say ultra conservatively about a 25% move into the election. Okay. So that is something, Craig, you could absolutely structure and build today instead of being in an asset that's insanely risky.
Mm-hmm.
Okay. But you know, just something to think about, Craig. And look, I know taking the loss is hard. That was something that was harder for me early on in my investment career. I now take a loss so fast and so quick, right? The moment something isn't working for me, I'm out instantly.
Mm-hmm.
Right. And the faster you develop that mindset, right, the more successful you're going to be. And it all comes down to this, right? Think about never losing money, right? And from Craig, kind of what you just told me, right? You very openly realize you're in an asset that's way too risky. Okay. And you have some assets here that are much less risky, way more diversified. Okay. So probably a better place to have your capital.
Mm-hmm.
Okay. Cool. Now let's see here. Jerry, Shahid, Sue L. Let's see here. And you guys can feel free to just type into the chat box. But let's see here. If you guys can type in who has, you could type in 50 plus if you have over 50,000, and you could type in sub 50 if you have less than 50,000. That way I know which portfolio you guys can design today. Okay. And if you guys want, you can put on paper, but hey, if you want to make, you know, some money by the end of your trial, certainly you can use the real capital too, but hey, you can do whichever one you're more comfortable with. Absolutely 100% up to you. Right. And in your decision-making process. Okay, so let's see here. Sue L, how much capital do you have to work? And just type in 50 plus or sub 50. Shahid, I think he was saying he was over 100 in his 401k, so we know that. Jerry, are you sub 50 or 50 plus? What does that look like for you? Okay, and Ash, you know, capital sit on the sideline. Is that over 50K or is that sub 50K for you, bud? Okay, Ash is over 50. Thank you, Ash. Appreciate that, bud. Okay. Now let's see here. Jerry, are you sub 50 or 50 plus? And then all we need to do is hear from Sue. Okay, Jerry says sub 50. Thank you, Jerry. Appreciate that. Very cool. Okay, guys. Now let's cover kind of the downside protection on the buy and hold. Okay, so super cool. So on buy and hold, your downside protection is going to be your silver asset, right? Safe haven asset. So that if the market starts rolling, that's going to save your booty here. Okay. And it's really cool, guys. And you'll see this, right? If you look back, okay. Actually, let's just do this here live. Let's take a look at what silver did when the markets actually went down. Okay. So let's look at SPY here first, just so you guys can kind of see what this looks like. And let me zoom out this chart because that was way too long of a time frame. Okay. So here is what, and so let's use these dates specifically. So let's look at, let's see here. That's 221 to 323. Okay. Let's look at those same dates with silver. Okay. Oops. And see, it definitely looks a little different. Okay. So silver, if we look, you know, at the same time was actually bumping up a little bit. Okay. And it's pushing up. Okay. And let's see here. Silver set its low kind of with the market. Okay. But silver is a safe haven asset, guys. So you can see that this will transition over. And this chart's actually kind of hard to read because there's just not nearly as much volatility to it as the S&P 500, not nearly as much volume. So it's a little bit tougher to see kind of in here. And I wish I could overlay them. And that's something I actually need to contact Ameritrade to figure out. But let's see here. Let's see. So let's get SPY. Okay, 221. So there. Okay. And here. So it actually didn't quite work as well as I would have thought as a hedge there. But really, Jason's whole thing on silver is it's really your kind of your hedge to the deflation of the American dollar. Okay, so as the value of the dollar drops, right, as the Fed is printing money at record paces, the value of precious metals actually increases. Okay, so right here, your hedge is actually going to be in silver instead of having the put options. Okay, and silver's just been on a massive run this year too, as you can see, right? We started the year, silver came in, started the year $16. It's almost, you know, almost doubled at this point. Okay, let's see here. Okay, and let's see here. The only person we didn't hear from on Capital was Sue, actually. Okay, and very cool, guys. And it's just really, you know, it's so simple to kind of see the difference, right? Instead of owning individual stocks and, you know, and a lot of times, guys, those individual stocks, I know Shahid was just talking about, you know, owning a large portion of his portfolio in cannabis, but literally, I think there's a single cannabis company that's profitable out of all of them. So way too risky, ultra high risk. No, 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 no. Like I told Shahid earlier, if it was Uncle Shahid, I would tell you, Uncle Shahid, you got to get out of the cannabis stocks immediately. And also, we're looking for gold to go down kind of, you know, 20 to 30% in the short term. Okay. Not silver, but gold specifically. Okay. And they're two different assets, right? They're both kind of lumped into the safe haven, but they certainly trade completely different. Okay. All right, guys. So let's see here. Now, let's see here. Ash, did you go ahead and allocate capital to that at this point? Craig, did you allocate capital, or at least, and guys, if you don't use real capital, at least put it on paper trades, right? That way you can compare apples to apples and see exactly what you would have done over the same time period. Okay. So buy and hold, guys. This is right here. Okay. And the pro is going to be up here. Scroll up. And then, guys, if you haven't saved my number yet, make sure to save it. It's right here on the screen. Okay, and feel free to just send me a text to Craig and Shahid and let's see here, Anita, Sue, Jerry, Ash. Just send me a text too. And Ash, if you're ready to go ahead and upgrade to the Pro, bud, just send me a text and we'll go ahead and get that done for you. Okay. But yeah, Ash, we're looking for a massive melt up. You know, Craig, Jerry, Shahid, Anita, but you don't want it to be in crap, unprofitable companies. You want them to be in the best companies on the planet. And it's beautiful because you can spread your risk over 500 companies and get that 175% increase buying power when you structure there, right? And there's, you know, no way to do that with cannabis, with cannabis companies. And just, you know, Uncle Shahid, I'd tell you, hey, bud, you know, too much risk there. Okay. Any other questions at this point here, folks? And you know what? Let me get you guys some links so I kind of know. Let's see here. Jerry and Craig need links for buy and hold because they're sub 50. So let me go ahead and get those links for you. We'll send those over to you guys. Okay. And I know Shahid is over 100. Let's see here. And then Ash is also over 100. And Ash, so you already know what the upgrade structure looks like. So look forward to speaking with you about that and getting you upgraded, getting you extra content. And guys, the cool thing too, when you get upgraded today, you're actually going to be invited to our exclusive boot camp this Thursday. Okay. And it's actually going to be at 3 Eastern. So in a few hours here, we're going to be covering our new option trades. Okay. So we'll be taking some profits from last week, and we'll be adding some new options as well. Okay. And the boot camp, guys, is our high alpha trades that we do, right? And it's also just going to dive deeper into educating you on what we do, why we do it, okay, and really taking you from any level of trading that you're at with options to a pro level, okay? So give me 1 second here, guys. I'm going to go ahead and get links here ready for, let's see here. Craig, I'm going to go ahead and shoot you over your link, bud, to the buy and hold, okay? So you can use that to sign up, Craig. And then you can also, hey, my pleasure, Craig. And it's really cool when you do sign up, Craig, we will invite you to the option trading boot camp at 3 this afternoon as well. Okay. And let's see here, Jerry, let me send that over to you as well, bud. Okay, perfect. All right. Is anyone else in here sub 50K, Anita or Sue L? And if you guys are sub 50K, just type in sub 50K or 50K plus. That way I kind of know where you guys are. Okay. And Jerry, thanks for the awesome interaction. Jerry, do you have any questions too, bud? And Craig, do you guys have any questions? Okay. Anita sub 50K. All right. So Anita, let me send that over to you. Okay. And Sue, so you're the only one I haven't heard from yet. Are you over 50K or sub 50K at this point, Sue, for capital to put to work? Okay. Jerry said no questions. Okay. Awesome, Jerry. And hey, if you do have any other questions that you want to ask after the presentation, just shoot me a text and I'll call you as soon as I can. Okay. Very cool. All right, guys. And let's take a look at a few more things and then we'll go ahead and keep moving. All right. So give me 1 more second, guys. I'm gonna find one more piece of content here we'll cover, and then we'll be all set to jet. Okay. Let's see here. Okay, let me just find one more thing I'm going to show you guys, and then we'll go ahead and wrap this up. And while I'm doing that, I'll go ahead and play Mark's testimonial here. Mark, how much are you up today, bud?
I'm up 83,000 today.
Yeah, baby.
And that's on top of 39 yesterday.
Woohoo!
35 yesterday.
Awesome, Mark. I love it, bud. Yeah, it was, I keep getting text messages from clients saying, hey, should we duck out of TLT? Hey, should we duck out of TLT? No, let's wait till we get the sheer panic, guys. The sheer panic is what we're waiting for, and we are not there yet. So awesome job, Mark. I love to hear it, buddy. So proud of you. Awesome.
Yeah. Hey, thank you, because I would not be in this positions if it weren't for you. I'd probably be losing money today.
I love it, Mark. Well, hey, bud, I told you we're gonna take the thrill out of the market for you. Okay, cool. So thank you guys for taking a second to look at that, and just wanted to cover a couple more things. Okay, so really, guys, we a couple simple options, right? And these are the links I just sent out to you guys. Okay. So the buy and hold portfolio, right? Great for accounts $50,000 and smaller. This portfolio uses ETFs to be long or short specific asset classes. Okay, super minimal amount of changes, guys, throughout the year. Most of our clients that are using buy and hold are working full time. Okay, and we only had 5 changes in 2019, right? So that's going to take you 5 minutes worth of work. Okay, no options are used, and it generated 25.31% return in 2019. That's not even close to my favorite part. My favorite part is its biggest drawdown month was 1.6% because of the balance of what we structured, while the S&P had in the same month drew down 7%. So a fraction of the drawdown, but actually performed right with the market in a safer manner. Okay, so that's one. Okay. And buy and hold trades, guys, are always done at Monday at noon Eastern. Okay. Like clockwork. So all memberships, and this is really important, team, all memberships are tax deductible for the year in which they are made. Okay. So when you purchase today, and let's just say you guys, either you make a lot of money or you have a business, you can actually just expense that through either one to hedge off your capital gains or your federal tax exposure, right? So if you're an individual, and let's just say you made 20 or 30K in the market so far, you can literally use the cost of our memberships to hedge off your tax exposure. Okay. And for individuals, you can expense it under membership fees and dues. Okay. And business, there's all kinds of ways you can expense it. Okay. Now, the pro portfolio, guys, very attractive to investors with 100,000 to work with. Okay, this portfolio will show you how to trade like the top hedge fund managers without the 2% management fees or the 20% performance fees. Okay, changes will be made on a weekly basis to ensure maximum protection of your capital. Okay, you're going to have 6 to 8 hours of live education and training every week like clockwork. Okay, you're going to have a sophisticated balance of core asset classes. You simply buy the ETFs though, super easy. Okay, it took us 34 years to understand what asset classes to own depending on what the Fed's doing. All you have to do is buy the ETFs we recommend though. Super easy. You don't have to do the 34 years of research that Jason and I did. Okay. And pro members really enjoy our exclusive content in the Wednesday and Friday webinars. Okay. And pro trading is Monday, Wednesday, and Friday at noon like clockwork. Okay. Once again, the pro membership is 100% tax deductible for the year in which that purchase is made. Okay. Now, understanding the boot camp. It's fast and furious. This program is for the investor who wants to protect their nest egg yet take advantage of the lucrative offers and powerful ongoing training that come from an experienced trader's desk. Okay. And guys, you're going to get all of the high alpha trades. Last month, we did 78% return in the boot camp alone. Okay. So this is a free bonus when you guys sign up for the buy and hold, right? If you're sub 50K, and also Shahid, if you're, knowing that you're over 100K, you can definitely get this access into, you actually get 30 days when you sign up. So Craig, Jerry, and let's see here, and Anita, all of you guys will get access to the boot camp this afternoon at 3. Okay, when you sign up today. And just remember that purchase is tax deductible. Okay, so pretty cool. And guys, we also have the ultimate lifetime membership. You will have your own exclusive lifetime members only webinar every Tuesday at 3. Okay. Select trades geared to the elite trader and only available to the lifetime members of the pro portfolio. And once again, guys, this is 100% tax deductible. All right. So let's see here. And then, and Shahid, very cool. All right, guys, any questions at all at this point? And thank you so much for taking the time. Okay, just showing some, oh, you know what, one more thing, guys, I'm gonna touch on. Okay, this is pretty cool. This is what's happening to your money. This is what's happening to your purchasing power. Okay. This is what the dollar looks like. This is crazy, right? And while we're talking about that, look, let's go back to this page. And I want to show you guys something really cool. All right. And something really good to think about. Okay. If you are under, let's just say you have $100,000 sitting in your bank account. Okay. Real inflation in the United States, if you're not on the coast, is between 7 and 8%. Okay. So Shahid, Houston, pretty solid. You're right about 7%. Texas is actually one of the lowest states with inflation of any state because it's actually so independent. But let me show you this really quick. So let's call it conservative. Let's call it 7.5%. Okay, guys, your purchasing power of your money goes down by $7,500 a year. Okay, probably actually even faster this year. Okay. So for every $100,000 you have just sitting in a bank account today, right? And if you're not going to go buy a house in the next year, why in the world wouldn't you go take that 100K and invest it? Because guys, if you don't, And let's just say if we meet again, we talk on 8/20 of 2020, theoretically, right? You didn't invest that 100K, you may as well withdraw $7,500 and go light it on fire, just like it's shown here. Okay. That is literally what happens with your capital. Okay. Let's say you have, let's do another example. Let's say you have 500,000 either sitting in your trading account in cash because you're scared of everything that's going on. And I understand it, right? Times are scary, but the Fed is pushing the market through the roof. Okay. But because they're doing that, they have to print money. So get it in the market, right? That's how you're going to hedge off that massive, massive inflation hit. Okay. So let's just say at 500K, let's take a look at that same 7.5%. Guys, that's $37,500 a year in inflation. I mean, heck, you can pay for one hell of a mortgage with that type of money annually, right? New investment property, right? That's crazy how much that's going to cost you. Look at that. Insane, right? So very cool, guys. Just wanted to put that up. So many people do not realize how insanely just bat-ass crazy our real inflation rates are today. Okay, but I wanted to show you that. Okay, so awesome. So one more thing, guys. I'm going to leave it on this last slide. Okay, and then we'll go ahead and wrap up here. All right, so protect and grow your hard-earned nest egg today. If you have any questions, guys, before you do get started, give me a call, 505-322-7515. All right, call us now to get started, okay, or just click on the links that I sent you, okay, and we'll certainly get you that access to the 30 days of boot camp. Yeah, so great question, Anita. So let me see here. Let me go back to my my slide here. And you know what? I actually need to edit this. Just give me 1 second to just modify this just a hair. So we just changed this recently. Okay. Oh, you know what? And I have to change this to 3. But this is yeah. So Anita, very cool and great question. Anita wanted to know what else this subscription includes. So it's the Are you referring to the buy and hold, Anita? Okay, and okay, cool. Yeah, Anita. So the buy and hold is going to get you our market monitoring 18 hours a day, 5 days a week. Okay, so you don't have to. And really quick, I've never actually done the math. So let me see how much time that is. So 18 times 5. Okay, so we're going to be watching the markets literally 90 hours a week for you. So you don't have to. Okay, let's multiply that times 52 weeks. God, that's insane. So market monitoring that you're going to get, okay, from us is 4,680 hours a year. Okay, and this goes for both buy and hold and for pro. Okay, and what we're going to do, Anita, is use that market monitoring, that research to help you understand and help our clients understand exactly where they want to be. Okay, so pretty crazy, but literally, we need to watch the markets that much to stay on top of what we're doing. Okay, but I mean, who has the time personally to spend on that, right? That's an insane amount of time, right? Most people aren't even awake that many hours in the year. That's how much time that we're going to spend watching the markets for you, Anita. Okay, you're going to have 2 hours of live webinar interaction every Monday. Okay, and then you're also going to get access to our $10,000 bootcamp program for free for 30 days when you do sign up. Okay, and in the boot camp, Anita, you can learn about a ton of stuff. There's probably 30 to 40 hours. Let's say conservatively, there's probably 30 to 35 hours worth of content you can go in there and digest and study in the boot camp that's waiting for you in there today when you sign up. Okay, and you're also going to learn, folks, how to short the Hong Kong dollar, and that trade specifically is looking for a 12,000% return. Okay. Subsequently, you're also going to see the trades that we're putting on here in just a few hours. Okay. Let's see here. So yeah, so Anita, if you have, if you really like the Pro, we could give you 30 days of the Pro as a bonus as well. Okay. So the Pro has a lot more content, right? So really, let me go out to this slide. This will be a little bit easier to show you that. Okay. So the Pro is going to have those webinars every Monday, Wednesday, and Friday. Okay, a little bit more trading that goes into the Pro. Okay, and a lot more live interaction. You're going to get 6 to 8 hours of live interaction with the Pro. Okay, with buy and hold, you're going to get 2 hours every Monday. Okay, but during your boot camp, you're going to get a couple extra hours for free on us too. Yeah, Anita, so you're going to get the portfolio structure that we have. So the buy and hold doesn't use options. Okay, so it's great for accounts 50K and smaller, and really just people that are just really busy in general. Okay, we're going to show you what ETFs to be long or short specific asset classes. Okay, the cool thing is it's going to be very little work for you. Okay, minimal changes throughout the year. We had 5 in 2019. We've had a lot more volatility in 2020, obviously. So we've had 7 changes so far this year. So last year would have taken you 5 minutes to grow your capital by 25.31%. Okay, buy and hold trades are done every Monday. Okay, and that's when you're going to get your alerts. Okay, so more kind of set it and forget it type of system. Okay, a lot less work. Okay, and you will get access to the 30-day bonus of the bootcamp today when you do sign up. Okay, awesome, Anita. And Anita, do you want to go ahead and unmute your microphone? And that way we can interact live too, and you guys can ask any questions. And Craig, Jerry, Shahid, Sue, feel free to go ahead and unmute your microphones there, guys, and just ask any questions that you have. Hey, Craig, how's it going?
Oh, well, I unmuted. I don't have any question. I'm just processing it all right now.
Okay, cool, Craig. Yeah, and just, think about that. I know that you realize mentally you're in a tough spot, right? With that penny stock. It sounds like you lost about 25K on it already. Is that right?
Well, no, it was basically the options.
Oh, okay.
Yeah, right now I think I can free up 8,000 and I'll just have to sell it and take the loss. I'm trying to figure out, how I can free some other stuff. I've got, my retirement is locked up in Fidelity, my main retirement. I can't touch it because they have to manage it. I can't get that until I'm 62, but I have Ameritrade, and then I have, Robinhood. So if I put Ameritrade and Robinhood together, I could probably get more cash. So that's what I'm thinking about right now, processing this.
Oh, cool. Awesome, Craig. And then with the Fidelity account, is it through work? Is that why you can't manage it?
Through the Navigators. So we're with a nonprofit Christian organization, and I've tried to get it out before. I had a supplemental that I used, but we used it for cash. We had a major medical expense this summer with one of my daughter, about $400,000 worth of medical.
Sorry to hear about that, Craig.
Yeah, hopefully insurance Samaritans will cover that, most of it. And then, but yeah, they won't, unless there's a waiver that of how you can get it out, because I would like to, use that. There's, like I said, 90,000 or just 100 in there, but
okay.
They told me I had to wait till I was 62 before I can manage it myself, but they probably have a contract with Fidelity,
Yeah, and sometimes that will be the case, and typically not until you're finished working with the employer can you roll it over to your self direction.
Yeah.
But cool, and yeah, Craig, if you can put that capital together, I mean, heck, it's I would if I was in your spot, I'd much rather have it in a safer, more diversified area compared to something is risky, right?
Yeah, well, I was, before I did the options, just on my own, I was probably making 100 a week, just buying and selling. And I had the rules down. If it wouldn't sell, I'd just leave it. So, the last 4 years have been up and down. And so if I got into something, I just watched the little patterns, and just did a little research. So just buying and selling stocks, I was still making about 100 a week for the last 3 years. But then this last year, I got greedy and saw this, what I thought was a once in a lifetime opportunity to do some puts. And
Sure.
that's where I got burned. So basically most of it is in the puts and some in the penny stocks. Mm-hmm.
Okay, gotcha. Well, don't let those penny stocks turn into the puts. Right.
Well, after talking to you, yeah, I'll probably just take the loss and free up some capital, and just move ahead with rule number 1 and rule number 2, as you pointed out. And it sounds, out of everything I've seen, and talked to, this makes the best sense of anything. I haven't tried it yet, and I missed the opportunity of trying the free trade alerts that you gave me. That expired because this summer was just, we were 25 days in the hospital, 3 ER visits. So just,
Man.
So I'm just coming out of this and trying to get my head above water and get some footing here. But,
Gotcha.
Really appreciate your training and teaching, and it looks very good.
Awesome, Craig. Well, hey, bud, thank you so much. And I hope your daughter's continued recovery is as smooth as possible for you, bud. Can't imagine.
Thank you so much. I appreciate it.
My pleasure, Craig.
Uh-huh.
Okay. Awesome, Craig. And thank you so much for that. Great question and great comment. Okay. Hey, Shahid, how's it going? And Shahid, if you want to go ahead and unmute your microphone, bud, you can interact here live with us. Okay. And let's see here.
Unmute. Okay. So now you can listen to me.
Hey, how's it going, Shahid? Yeah.
Pretty good, actually. I mean, it was a very valuable, actually, 1 hour from me, having my, brunch and everything together. One thing, actually, I mean, I noticed in the end, actually, you mentioned about inflation.
Uh-huh.
But you did not actually discuss the tax implications, okay? Because when I add actually my tax bracket and inflation, it comes out around 32% per year, okay?
Whoa. How did you factor that, Shahid? That's interesting.
So this is actually, this is the point, actually, means some of the people are listening, and in the end of the year, when they say, oh, yeah, you have to fill out the tax forms and 32% is already gone.
Right.
So you should actually put it in your system so the people actually know when they're planning, And the other thing is this, the brother who mentioned about his daughter's situation. It happened to me also, because we don't care about the medical aspects when we get old. And my wife actually was very healthy, and when I was about to retire, uh, she had an intracranial hemorrhage. So
no.
luckily I was employed, and the insurance actually paid. I mean, can you imagine this? The bill, she stayed in the hospital for 95 days, okay?
Wow.
And when she came out, ICU, all this thing, the total bill was 95 days, $1.2 million.
Dang.
And the insurance paid 752,000, okay?
Whew.
Now, normal insurance, actually, they deduct, out of your pocket around 10%. But
Okay.
luckily, I was working for a wonderful company. They covered 100%.
Wow.
It never happened and never is going to happen now, because oil and gas industry is going bust now. So I think we should, you are, doing all this thing. If you mention these things, actually, in your presentation, only one slide at the end of the game, that please think about this very seriously. So what I actually, the thing is, another one, Martin Weiss, actually, I talked to him and he mentioned, to me that you should set aside definitely money for your insurance policy. Even you take 100% policy, still you have to pay actually out of your pocket. You have a type 4 or type 5 medicine.
Uh-huh.
Plus specialist fee and the hospital fee for the first 3 days. So this is actually very important. The lesson which I learned it, and it will help me a lot. Thanks. I had some money, but still I'm saying is, Nobody's so
Sure.
lucky probably like me or like you.
Sure.
So
Yeah.
so this is actually another thing. I mean, and you're talking about all these finances. So if you mention these couple of very important things, it's gonna happen to everybody.
Sure.
So I'll appreciate. I mean, but I really learned a lot, and this is the thing. Two things. It's when you were talking about inflation, and it came out of my mind that I should talk to you. So
Sure.
that's my at the end of your talk, and I'll be following you, and I'll look into it again, read it. I mean, try to make my if there's any haziness in my mind, I'll get it clear, and then I'll
Sure.
get back to you.
Okay. Hey,
So
Shahid.
thank you very much. I appreciate.
Hey, thank you so much, Shahid, and great point, right? Really, really good point. So thank you, Shahid. That was great. So appreciate that. Very nice, Shahid. And yeah, just call me, okay? As you're
Okay.
looking through things. Look forward to
Okay.
talking with you, Shahid.
Thank you very much. I appreciate.
Hey, my pleasure, bud.
Okay. Now
Okay.
I have to go outside. Okay. So thanks.
Okay. All right. Thanks for coming, Shahid. That was a pleasure, bud. Oh, and Craig said, so sorry to hear about your wife. Hope she's doing well now. Thank you for sharing. Yeah, and Shahid, that was a great example. And not honestly not something I've really thought about. So thank you, Craig and Shahid both. Definitely not a situation I've really kind of processed. But yeah, that's why we got to build up those nest eggs and holy moly, crazy times, right? Okay, so let's see here, and I saw Gene Simmons just joined in. So thank you, Gene, for jumping in here. And we're about to wrap up here, but make sure, guys, to go ahead and ask any questions you have live while we're here, and certainly look forward to speaking with you after the webinar as well. Okay, and let me put my number on the screen just so you guys can call me. Okay. Um, Here we go. And so it's 505 322 7515. Okay. So feel free to call me or text me if you have any questions. And let's see here. Jerry, Anita, Jean, Jerry, and Sue. Any additional questions before we go ahead and close out here, folks? Okay, cool. Yeah, and Anita, go ahead and give me a call too. I'll be more than happy to walk through any questions that you may have. All right. Okay, cool. And Jerry said no. All right. Well, hey, Jerry, thank you so much. Anita, thank you very much. Jean, Simon, thank you. Jerry, Sue L, thank you so much. Let's see here. Craig says I'm encouraged, but got to go. We'll try to follow up. Awesome, Craig. Look forward to speaking with you, bud. Just shoot me a text or give me a call when you have some time, okay? I understand that, time schedules are what they are and life is what it is, right? So just call me whenever you can, Craig. Look forward to speaking with you. Okay, awesome, Anita. All right, folks. So thank you so much for your time and attention here today. Just call me or text me if you have any additional questions. We'll be happy to get on the phone with you and answer any of those questions to the best of my ability. Thank you so much, team, for your time and attention. Have a wonderful day. We'll see you in the 3:00 webinar after you sign up from the link for the boot camp. Have a wonderful day. Hey, Craig, you're welcome, bud. Thank you so much for joining us here today. Truly appreciate it.